U.S. worldwide income tax. What is that? Today we're talking about the U.S. worldwide income tax, which is an income tax you pay even when you're living and working abroad. So if that applies to you, you'll want to tune in, and let's get started right at the beginning. The United States is actually one of the few countries that taxes based on citizenship and not residency. In addition to taxing you on your earned income worldwide, the IRS also requires that you disclose foreign bank accounts that exceed more than $10,000. Even your retirement contributions that are happening in another country also need to be reported. Even if you open a business in another country, also needs to be reported. There's significant consequences when you don't report these things on your US tax return. Fines, interest, your passport might not be renewed, and worst case, legal consequences. The first question most people ask is, how do I avoid the US tax when I'm living abroad? And of course, the most aggressive response would be give up your US citizenship. However, this does require significant thought process before making that decision. Now, there is something called the foreign earned income exclusion that may be available to you. For 2023, you can exclude up to $120,000 of foreign earned income. You can even claim a deduction for foreign housing. Now, in order to be able to take this exclusion, you have to meet one of three possible scenarios. One, you have to be a US citizen that is a bona fide resident of this other country and is participating in the social and economic life of that country and is present there the entire 365 days of the year. Or you can be a US resident alien living in a country that has a bona fide tax treaty with the United States, and you have to be living there for the entire year. Or the last scenario is a US citizen or resident that is present in another country for at least 330 consecutive days of the year within a 12-month period. Now, the last way to try to avoid some double taxation is by taking the foreign tax credit. There may be a credit available to you if you paid tax to another country. It's really important that if you're considering working abroad or currently working abroad, that you have a really great CPA in the US that deals with these types of international matters, as well as a great local CPA to help you with the local compliance and ordinances within that country. We hope you enjoyed this latest installment of What Is That? Hit the like button, subscribe to our YouTube channel, follow us on LinkedIn, Instagram, and Facebook at Accounting to Scale. Until the next video, your favorite CPA, Tiffany Gonzalez.